The last time Chegg reported their earnings, this was back in May, the stock sold off 40% as AI became a threat to Chegg's business model. Chegg recently announced their earnings this past week, in which they are now incorporating AI into their platform due to consumer demand. On the news, the stock gapped higher, only to close in the red for the day. Let's get into this article before we look at the charts a bit more. This article is coming from Bar Chart. Chegg Q2 beats on revenue, stock jumps 25%, but again closes lower on the day. Online study and academic help platform Chegg beat analyst expectations in Q2, with revenue down 6% year over year to $183 million. The company also expects next quarter's revenue to be around $152 million, roughly in line with analyst expectations. Chegg made a GAAP profit of $25 million, improving from its profit of $7.5 million in the same quarter last year. Chegg outperformed guidance for both revenue and adjusted EBITDA, and saw year-over-year customer acquisition and retention rates improve during the quarter. The CEO said the following: "We launched the beta version of our initial generative AI experience in May, and feedback has been very positive. We believe we are in an unrivaled position to deliver a unique, personalized learning experience for students because we have the assets, the vision, and the balance sheet that no one else has." So this is just a chart of their revenue. Chegg's revenue growth over the last 3 years has been mediocre at best, averaging 17% annually. This quarter, Chegg beat analyst estimates, but reported year-over-year revenue decline of 6%. Chegg is expecting next quarter's revenue to decline 8% year-over-year to $152 million, a further deceleration of 4% year-over-year decrease it recorded in the same quarter last year. Let's talk about the user growth. Chegg generates revenue growth by expanding both its subscriber base and the amount each subscriber spends over time. Over the last 2 years, Chegg's users, a key performance metric for the company, grew 6% annually to 4.8 million. This is average growth for a consumer internet company. You can see how the user growth is plateauing. Not a good sign. Not a good sign. Chegg as a business and going concern, thinking that AI would decimate demand for the product. On the other hand, the decline in its user base was concerning, and its revenue growth was quite weak. Overall, this was a mixed quarter for Chegg on an absolute basis, but again, compared to the low expectations, the results seem solid. All right, let's just go to the charts, and let's zoom out. And let's zoom out to the monthly chart. And you tell me if you think Chegg has a chance of growing again in the era of ChatGPT, among others. All I see is further lower highs and lower lows on the monthly chart. All right, let's go down to the weekly chart. And this little pop was on earnings, hit the 26 simple weekly moving average, and shot back down. If price happens to move back higher during the next, say, bull cycle in equities, let's just mark this in here. We have weekly buyers sitting at $21. But But right now, that's a pie in the sky level. All right, let's go to the daily chart. And since the last earnings, price has been somewhat range bound. For the bulls out there, you can see for the first time in several months, the moving averages are starting to point upwards. So this level here should serve as a base, somewhat of an accumulation phase. The fact that price gapped higher only to close lower tells me that if price continues to move higher, you're looking for a first target at the $13 level. But if we can get closes above this, primarily on the weekly chart, there's nothing stopping price from moving to the $18 level. Now personally, I don't anticipate a lot of movement in the stock until the next earnings in October. So personally, I think there's other ways to use your hard-earned capital, right? It's all about finding alpha, and Chegg is not alpha. Thanks for watching. Subscribe, please like the video.